Operational business processes are static and routine, such as stocking inventory, checking out customers, or daily opening and closing processes. Operationalized analytics makes analytics part of a business process. Businesses should monitor and improve their operational processes on a daily basis. Otherwise, they will lose the market to their competitors. MIS is a tool that helps businesses to automate their processes, especially at the operational level. For example, at a company with 5,000 employees, automating the payroll process will save a huge amount of labor and time. Therefore, using TPS, Transaction Processing System, to automate operations will improve the agility of businesses. This picture shows the necessary steps for business process improvement. Organizations first need to document the current state through as-is diagram and then define measures, follow the process, measure performance, and finally identify improvement opportunities based on the collected documents. Companies can take advantage of new technologies to improve the efficiency of their processes. For example, Walmart and other grocery stores use barcode readers and self-checkout to speed up the purchase process for customers. We discussed operational business process improvement in previous slides. Now let's take a look at managerial business processes that are often semi-dynamic and semi-routine, like manufacturing process improvement and resource allocation. Streamlining improves business process efficiency by simplifying or eliminating unnecessary steps. Bottleneck occurs when resources reach full capacity and cannot handle any additional demands. For example, a computer working with its maximum capacity is not able to handle any further tasks and therefore will become a bottleneck for a process. Streamlining removes such bottlenecks. Redundancy occurs when a task or activity is unnecessarily repeated. Strategic processes, unlike managerial and operational, are dynamic, long-term, and non-routine, such as expansion strategies and stakeholder interactions. As competition in the global market is getting tougher, companies need to adjust accordingly to be able to stay in the competition. At the strategic level, Business Process Reengineering (BPR) can help companies to adjust to rapid changes. This picture shows how a company can improve the way it travels the same route by changing from foot to horse, and then from horse to car, and finally to airplane. Business Process Reengineering, or BPR, is the analysis and redesign of workflow within and between enterprises. This picture displays the basic steps in a business process reengineering. First, the scope of the reengineering project must be defined. Next is to study competition by surveying customers and employees to identify gaps. After this step, designers can create a plan of action to fill gaps, and in the end, the top management decides whether or not to permit the implementation of the proposed solution. The important point is that automation and streamlining operate departmentally, whereas BPR, or Business Process Reengineering, happens at the system or company level. Now let's go through this example to see how BPR and MIS can improve auto insurance claims at the Progressive Insurance Company. Using this BPR, Progressive was able to cut its claim settlement from 31 days to 4 hours. The standard claim process at insurance companies is shown in the left-hand picture. The customer gets into an accident, has the car towed, and finds a ride home. The customer then calls the insurance company to start the claim process, which includes evaluation of damage, assignment of fault, and estimate of the cost of repairs. The Progressive company took the initiative to use the mobile claim process, which is shown in the right hand picture. When a customer has a car accident, he or she calls in the claim on the spot. The claim adjuster comes to the accident site, surveys the scene, and takes photos. The adjuster offers the customer on site payment, towing service, and ride home. This model was later adopted by other insurance companies.